Structure and liquidity can be a great form of trading the financial market, where you get to understand structure and drafting out setups or entry, and as well as you know how liquidity can also be created to catch great trades. My name is Wealth, and in today's video, we are going to be talking about structure and liquidity. If you are new to this channel, kindly subscribe and turn on the notification button to get more content. Let's head straight to the video. Structure and liquidity is um ideal in any trading you want to do. So you must approach structure and liquidity in a way that must be very, very, I can't really say accurate, but it must be very, very precise, and you must be you must have a knowledge about structure, you get, so that in case you are trading, you will have, and if you have a full knowledge about liquidity, you'll be able to trade effectively. Now, structure depends on what you want to trade. There are different type of structure. We have a bullish structure, where we have higher highs and higher lows, like this. We have higher highs and higher lows, highs and higher lows. We have the bearish structure, where we have the lower highs and lower lows. There's a downtrend, lower highs and lower lows, where we have something like this. And we can also have ranging. There is consolidation. This one does not have either higher highs or lows, you get. So this one just random, you get. So now structure is basic, like it's the basic thing of all, and it is the most essential of all, you understand. So if you are trading anything, you must be aware of structure. If you are, whatever strategy you are using, you must be aware of structure. Structure is very, very essential, you get. So now, talking about structure, and in terminologies like this, we have, in break of structures, we have another break of structure. Yeah, this is another break of structure. So yes, this is a break of structure. Any weak high or low that has been broken successively is called a break of structure. Yeah, that indicates continuations, you understand. It is, all this break of structure indicates continuations. So in a case where we have something like this, a shift in price, like price breaking a strong low, because this is a strong low, this zone here is a strong low. So in any case where price is breaking a strong low, now we can call it what? A change of character. Yeah, we call it a shift in market structure, because price has changed its direction from a bullish scenario to a bearish scenario. So we call it a change of character. So likewise, the sell position, where we have breaks of structure to the downside, can you see? So we have breaks of structure to the downside. We have another one here coming. We have another one here, break of structure to the downside. You can see here. We have another one here. This is a break of structure to the downside. So likewise, for anything that's going to happen here, if we have any sign of market breaking the strong high here, since it's in the downtrend, we can call it a what? A change of character at this point. Call it a change of character at this point. So that is how to mark out structure. Yes, and how to present yourself in a form that you get it right, you understand. So you can see the ranging zone as neither up or down, as neither break of structure or change of character. So this one, in this type of case, we can be expecting breakouts where we have zones like this. Let me box it out. We have zones like this. So now what you'll be expecting is something like this, price breaking out like this and testing and dropping off the other way around. So anything can happen there. So that's that for that. So um so let me drop down to liquidity. So in liquidity, we have different types of liquidity. We have um trendline liquidity. We have trendline liquidity like this. So we have trendline liquidity like this. We have inducement liquidity in case of like this, a fake break of structure or a false pullback. So like this. We also have equal highs and equal lows liquidity, where we have W or M, I could call it. So something like this. This is an equal low liquidity and equal high liquidity, like this, like this. So This is the type of liquidity that we can have in the market. So you can see, guys. So now for a retail trader that trades normal chart pattern, you take this one as a what, a double bottom, where you can see assume that price is going to go to the upside. For a liquidity trader, you just have to wait for price to clear this low, then trigger like this. Likewise this too, likewise this too. So you are going to expect or wait for price to do what, clear this one first, look for a POI beneath it and move like this. So in the case scenario like that. So also for this one, we have inducement liquidity, where we have something like this. So for an inducement liquidity to occur, you have a false pullback. The first pullback here that is supposed to mitigate another block here, it's not going to mitigate the other block here. Likewise, it's going to create a fake pullback, so creating causing buyers to enter in quickly before price sweeps and then gets to the other block before mitigating to the upside. So that is that. So also we also have something like this trend line liquidity. For a retail trader as well, they will think this trend line is going to do what, move to the upside like so. But what, as a retail trader, as a liquidity trader, we are going to do what, wait for price to break this zone and then push to the upside. So you get, so like that. So that is how. So like that, so that's how it works. So you get the point. So now let me show you guys how to mark it on the chart. So you can see the structure on the other time frame is bearish structure, you can see. So marking out this pattern here, you see some things like this, you see something like this. We have a sweep of liquidity. You also have another block here. Yes, so you also have another block here. Now you can see that in some certain way, if you look at this inducement, this false pullback that created, now for early sellers, they are going to sell quickly and early sellers will be in profit. Fine, it is true, but there are some cases where early sellers won't be in profit. After breaking this low, price just do what, reverse and then go to the downside. Can you see? So it happens in many ways. Can you see? So it happens in many ways. So can you see like that? So we have different type of so you see that anything I'm trading like this now, any structure I'm trading like this is in line with the what, is in line with the higher time frame. Any structure I'm trading is in any setup or liquidity I'm trading is in line with the what, structure, is in line with structure. No matter what you do, make sure you trade in line with structure. You can see this is a liquidity, this is an inducement zone. This is the fair value gap as an entry from here. Can you see? This is the fair value gap as an entry from here, and price did what? Price moved to the upside. Can you see? Price moved to the upside. Yeah, can you see like that? So there are many things in the market that you can spot in line with the trend. You can see this one is like a counter trend, but in most cases it can happen like this. You get the point? In most cases it can happen like this. So price would, you can see this is a trend. Let me show you the structure of the chart. You see we have high, low, high. This will not be the low, this will be the last low, the pullback low, high. This will be the high here, this will be the low. You get the point? So you call this one high, you call this one high, you call this one we call the low again. The one beneath here is going to call the low. You get, the one beneath here is going to call the low. So this place will be the low, because this low, okay, this side will be the low, this side will be the low. Now this one will be the high, this one will be the low, the high, the low. Can you see? The high, the low, the high, the low. Yeah, the low will be beneath here. Can you see? So like that, that is how to mark out structure. It is much easier for you to mark out structure whenever you're doing this type of things. You understand? So in terms of break of structure, change of character. Now as I'm marking this, you can see there are many breaks of structure. In this sense, look at, there are many breaks of structure here. Can you see? There's another one here, a break of structure. Actually, yeah, a break of structure here. There's another break of structure beneath. Now for price crossing here, after this low was taken, we have this high, but this low was not taken out. So we have this low was not taken out, so we have something like a shift in price. After this low, we have something like this, a shift in price. You see, so can you see, guys? So we had a shift in price here. You get, so after a shift in price here, we do not have any low again. We do not have any low again. So we had this low, a pullback, this high, this low, so indicating that what price has changed from bullish to bearish. Can you see? So that's how to mark out structure. So I'll be ending the video. So if you are new here, actually this is my first video in year 2025. So this is my first YouTube video I'll be doing in year 2025, and I've decided that I want to start posting some content online. So guys, so yeah, so that you guys would learn at least a few things from me, you understand, on my YouTube video. So if you are new to this channel, please kindly subscribe to my YouTube channel, and make sure you on the notification button, and so that you'll be able to get more and more content whenever I post them online. So you get, so there are a lot of things that I will be talking about, but first I have to go with the structure and liquidity, so you'll be able to understand it. So probably in the next, I'll see you guys in the next video. Peace.